whatever's been going on in this world, it's super wacky. We had a minus 6% day at open on the NASDAQ. That was last Monday. And it's been straight up ever since in the stock market. In terms of interest rates, they're now pricing in a very, very high probability of a 50 basis point rate cut. In Canada, we're now looking at rates of like 4.29, 4.49, 4.99. We're looking at, in the US, you're starting to see rates creep down into the sixes again, which is great for well-qualified borrowers. You're starting to see, I think, a revival in real estate is coming. We're still trending towards the bottom, but there is definitely some upside coming here. So I'm excited about what's to come in terms of this entire real estate market. I'm really excited for the fact that there's, for the first time in years, we're starting to see some hope, because there's been a lot of negative. And I think as the yield curve inverts, it will be some pain. We're going to have some economic turbulence. For some reason, inflation reports are looking really good. Used car prices have fallen 12% now, which is a big drop. Interestingly, companies like Carvana that I short, which sell used cars online, they're fine. They're showing like that their revenues are growing and profits high, and it's like, but your main person buying all your cars is your dad's company. Such a crook, such a crook show with that company Carvana. I think they're a $10 stock trading at $145 a share, so they're like 14 times what they should be compared to their book value, which is wild for a used car company. But again, they own 85%, I think, of them and their associates own 85% of the entire company. So again, we don't have any choice in what the shares trade at. It's like, I was thinking with this concept, I want to talk about it today. I wanted to let you guys join the stream. So the first 2 minutes I was just rambling, but there's a really cool idea. I don't know if this is legal, but like, someone correct me if I'm wrong on this, but I'm pretty sure that you can go and collude in real estate and it's legal. I'll give you an example. Let's say a small town, like 70,000 people. It's a good sized town, has a Walmart, a McDonald's, a mall, a couple malls, stuff like that. Towns with 50 to 100,000 people that are good sized cities that have a lot of, they're a city. You can go into a city and you could buy in a neighborhood like 60% of the entire neighborhood. In a rental area, houses there are probably 200,000 a piece. You could go in and buy like 500 houses for like $50 to $100 million, control the whole street, and then control the comps. Like, you could decide every once in a while to like get a friend to go buy a house at 500 and force all the houses on that street to only sell at like 450, 500. So you can control the comps on your entire portfolio you already own. Is that legal? Like, is it a thing that you can actually manipulate the market? Like, I was thinking about that. Like, I used to own like 4 or 5 houses on one street. And I remember when I sold one of my properties in the street, I set the comp, and the appraiser didn't know that it was me that owned that property. And so I had all my other properties appraised. I set a record sale, and all the rest of my properties appraised way higher now. And I went to the bank and refinanced. And I was like, it was a very small scale, but I was like, did I control the price of the properties on the street by owning all the properties in the last 6 months that had sold and controlling what they sold for? And it's like, like, you could literally control a market and corner it. You could build demand for a market too. Like, that's kind of a cool thing. Like, you could buy in a city and you could decide what the rent is in that city if you owned enough of the real estate in that city. And it made me just think, when I was thinking about this Carvana corruption scandal and, the past SEC charges they're facing, and you look at their books and you look at what they're doing, and it's like, but like, kudos to them, good for them to be able to pump their company from $3 stock to $145, $147 a share. That's a massive growth in 1 year. It's like 600%. They become like a $20 billion company. And it's crazy because they're facing bankruptcy. Literally, they can't even sustain enough profit to pay the interest on the debt that they owe. And it's like, everyone thought they're going bankrupt, but maybe like there's some idiots out there who will actually buy that debt in terms of equity. Like, those dilute their stock and their stock goes keep going up. That's what's happening right now. Makes no sense. But things can be irrational for a long time. And it made me think, how do you capitalize on that in business? Like, you don't want to long shares in companies like that because they could rug pull at any minute and you're screwed. But in real estate, if you're buying cash flowing properties and you could concentrate in one area, you could actually develop such a niche that you would control the price of that real estate. If any property tried to sell below a certain amount, you'd just buy it, and you'd force the property you're worth something, right? So that's an interesting observation. Another reason why I love real estate is like, if you can control the market, I mean, that's another advantage, right? In business and in real estate is that you have control over the outcome. So today I'm gonna say I'm pro real estate today. Some days I'm like, oh, real estate's a lot of work. And like admittedly I'm choking right now on everything I've chewed. I've chewed off a lot of deals. We just bought we've got a property that's potentially a duplex, just picked up a fourplex. We've got another 25 unit hotel closing here with a big land development portion. We picked up a 24 unit apartment. We picked up 8 flips recently. They're mostly along the way of finish. This is like what I've been doing this year. We've got a couple of hotels in Florida. We've got a new mansion flip in Florida I picked up just because I was on the second mortgage for it, and it's going through foreclosure, so I had to pick it up. There's just so many deals that have been flying in my lap that we picked up a hotel and a motel in Bayfield apartment. There's just so many deals flying in right now. It's just like trying to stabilize all that is a lot of work. And I'm reminded of like in the hard work, in the pain is where I make the most money. Whenever money is easy, I never make it. Like for some reason, I'll buy crypto, just like won't make any money. I'll buy stocks, they never go my way because I have no control over the outcome. But when I buy property and I renovate it and I build a business around it, I always win. So that's a reminder to me that looking over my past 12 years investing in real estate, it's very hard to lose when I'm in control. And I'm reminded of that and how much I like being in control. So today is about, maximizing return at the same time minimizing risk. And that's how you maximize returns. Don't lose money. Don't lose money. And in real estate, it's a lot harder to lose money, I think. Whoa. Sorry, I almost knocked over my tripod there. How you guys doing? Clash Royale, just join the comments. Hello, how you doing? I didn't promote the stream tonight. I didn't share it on my socials. I was in a rush. We're doing a bunch of things around the property, and my wife and I were up late trying to onboard these new hotel units. Like a lot of problems, a lot of issues at all the properties. It's tough to outsource. Like, I'm gonna gripe about some of the things I've been going through in the business. It's just scaling it can be very tough. You don't expect it to be as tough as it is, right? You get some bad contractors or bad property management or all that kind of stuff can create a massive amount of additional friction. And friction is pain to your growth, right? It basically falls to the owner to step in and make sure things don't go awry. And so I've been battling a lot of that kind of stuff recently and taking out a bunch of new deals. And so I'm going hard on real estate. I've bought a lot of properties. We're at I think I've acquired in the last year, to add it up, but I don't know. Our portfolio's got to be like 25 million in real estate now in properties. More than that now, maybe might be 30 million under management now with these new closings coming up. So it's like just a lot of stuff for acquiring, and on the journey to 100 million in properties purchased is just not properties purchased, sorry, assets under management. I've purchased probably like $80 million in property already, but I've bought and sold a lot of it, so I don't own all of that right now. But yeah, the growth is painful. And so I guess a couple of asks I'll have if anyone's watching this and they have solutions or they know, they know anyone. I'm looking to hire still. We are always hiring construction. My cousin and my brother are looking for people to help, looking for construction guys. So if you're handy and you want to come work for our team, you want to help do floors, paint, whatever, we need people, obviously. Property managers. There's an opportunity right now for someone to join the team who wants to be between like Sarnia and St. Mary's, either or, that has the chance to be so if you know someone who has experience in hospitality or experience in property management and wants to join in, obviously send them my way. That would be great. Those are like immediate needs in the business. It's hard to make the right hire too, to find the right people to run things. What else is going on in the world of the business? Financing. We're closing in on some deals here, and one of the properties we bought had seller financing already built into it, and then they refinanced it with a private mortgage, and it's like a 12% open, which is brutal. So if people want to get in on a lower rate, I'd love to refinance that at like 9%, 8%. That would be an opportunity as well. It'd be a safe loan to value, like 50% loan to value. We're putting in a lot of cash to buy out the second that's on it, so there won't be a lot of debt on it anymore. We need to get the debt under control. A lot of guys are operating, you can operate with high interest debt for a short period of time, but you can't run a stabilized asset with expensive debt. You have to get the debt down. So that's one of the things I'm working on right now too, is like refinancing and reconsolidating. Some of these acquisitions I'm taking on are from people who are in default. So I pick up a deal, I assume everything as it is, and I step in as the new managing partner of said deal. And so that's something that like is on my mind. I'm cognizant of like raising capital is, one of the challenges in this business, and raising debt is another challenge in this business, right? So that's something I've been working on. I need to get better at that. I'm not amazing at putting together like raising capital slideshows. I should get better at that. I should spend more time at it, but I feel like I'm just stuck in the trenches dealing with all the issues of the properties. It's hard to outsource those things. Like, I don't know, so many little things pop up, and employees just don't know how to solve things. Like, how do I solve this? And it's like, man, there's a standard operating procedure. Like, you should know how to do this. And that's training the person to do that, right? But anyway, those are struggles that we're going to go through as we grow into more, larger portfolio, more units. ZR Wooten says, how do you know about DST, or how much do you know about Delaware statutory trusts? I don't know a ton. I really don't know a ton about the Delaware statutory trusts, to be honest with you. I can't speak to it. I know that for a while there, places like, Delaware, South Dakota, and places like, there's all these places where Wyoming, where people set up trust structures that have specific advantages in terms of like legal protection. I have found that as a Canadian investing in the US, it was between setting up like an LPGP 3-tiered structure to avoid double taxation and setting up like a Bahamas or a Cayman Islands entity. The cool thing is if you can set up like a trust that's offshore trust, and you could then 1031 exchange in the US. So there's some cool stuff you can do with offshore trusts. I don't think that applies with US trusts. I'm not sure. Not 100% sure, but I know the legal protections are there if you don't pierce the corporate veil by setting up a trust structure. You definitely get some advantages that way. But yeah, definitely talk to a lawyer and accountant. Don't sue me, bro. Like I don't want to give advice on here that gets me, someone says, oh, like I relied on your advice to set up a corp or a trust structure or an LPGP structure. Obviously get your legal experts and your accounting experts to give you good opinions. Each situation is different. It depends where you're buying properties. It depends how you're structuring your businesses. Most of the time, not always, you would own it like an LLC in that state in which you're investing, and that would roll up into the LPGP structure and then probably up into a trust. But again, like I can't tell you that there's one way that's better than another. Let your legal profession, speak to that. Clash says, what cities to look for as a first-time home buyer living in the GTA? There just isn't a lot of great. Where you could get in close to GTA? You could close to GTA. You could find Oshawa. I think has some pretty good price to rent ratios. I think there was at a point. I don't know what it's doing right now, but like 6 months to a year ago, I've seen deals in Oshawa for like 400 grand. You buy detached houses, duplexes and stuff, and I was like, like you probably get like 2,000 rent. Like you probably get like 4,000 rent of this, almost 1% rule. Starting to be attractive given Oshawa's close to the GTA. Yeah. Randy says, when researching hotels, would you walk us through your due diligence process? How would you verify occupancy demand, especially for those super remote areas? So yeah, I mean, one of the challenges with taking on hospitality is, occupancy rates. Very, very important, and demand too, right? I think a lot of it comes down to looking at what the competitors are doing. So you can go out there and see what competitors are doing. There is AirDNA data. You can look at what Airbnb is doing. You can look at the current financials as well in terms of like what the existing business is doing and what it's done in the past, and extrapolate. So what was it doing in 2019, 2020? Why was it not doing so well? What's crazy to me is like when you look at like the ones that perform well versus the ones that don't, a lot of the big differences are like, yes, obviously renovated furnishings, those things make big differences. But the little things you wouldn't expect to make as big of a difference is like a barrel sauna and like a hot tub. Like when people are booking a hotel, they'll book yours and pay. Sometimes like it's a difference between like 50 to 60% vacancy in the off season to like 80% booked because you create an experience that people want to go there and have a weekend experience, or they want to go during the week and have fun. And so if you can build that sort of atmosphere at the property, a lot of people aren't doing that well in Ontario. Like there aren't a lot of properties that are like a resort escape. And so the ones that really level up and offer that like extra get a good ROI. You might spend $10,000 on a barrel sauna and get a huge ROI on that, right? Like you might get 20% more revenue, which like on $1 million hotel could be 200 grand a year on a $10,000 investment. So little things like amenities can make such a big difference. Customer service makes a huge difference. How people feel when they check in, how they feel when they check out, how they feel around the property, all that stuff really helps enhance the experience. But yeah, how do you verify things like that? Again, like the estimates are just that, estimates. You're going to have to look at what competitors are doing and try to gauge the demand for that. One thing you can do too is like that I like to do is a fallback and run your numbers of like, if I had to run this as an extended stay, like if I just had to put people in here on a month-to-month basis, what could it generate? Like, could I throw a kitchenette in here and run these on a monthly rental basis and still cover my nut? So that's what we do in most of our properties is like, my worst case scenario is if the hospitality fails, we just revert back to like extended stay rentals, weekly, monthly, let people go in there and then just live there. And that's like a backup where you get great occupancy as long as the area can sustain and needs housing. And in Ontario, to be honest, immigration has been such a problem here that like it's an automatic. In like every market, people need somewhere to live so badly. If you provide a good quality housing product, it's like rented. Like you get 100 applicants like that. So that's one of the due diligence back checks that I'm doing is like, can we pivot and convert this to extended stay and make it viable? And if the answer is yes, then that's solid. What do you think about spring 2025 market in GTA? I think rates are going to fall meaningfully between now and the spring. And I think we're going to start seeing at least 3.99% mortgage teaser rates next spring. There'll be promotions on, mark my words, at 3.99% here in Canada, in Ontario. So that 3.99 is going to generate a ton of demand. People are going to lever up again because they were just so afraid. So I think just time should heal a lot of the wounds people are experiencing. Those who are going bankrupt are going to go bankrupt. Those who are fine and have capital are going to start deploying it. Once they're sure that rates are creeping back into the threes, things are going to heat up in a big way. And as we get into like the 2.99 promotions again, which I think we'll start seeing before 2026, then we're going to be really heated in terms of values creeping back up again when debt is cheap. You remember, debt has been at like, a lot of us real estate investors were getting used to 7 and 8% debt. Like we were, obviously going to get used to 7 and 8% debt, meaning that now it's at 3%. We're like, holy, like things pencil so much better when you had $1 million loan at 8% or 7.99, let's say, which was a reasonable rate 6 months ago. And you were paying $80,000 a year in interest, and you're penciling that, and you're making your deal work. Well, now your deal at 3.5% has a $35,000 cost per million you're borrowing. 80,000 versus 30,000 is like a third almost. So you've cut your costs dramatically when you're down like 35, 40 grand a year in interest. It's like cut in half right there, right? So cutting the interest rate in half is very bullish for real estate. Real estate, it directly correlates to the rates. They say every 1% drop in rates should lead to an 8% change in the value of properties. So if rates fall from 7% prime to 3% prime, we should see 30 to 40%, 20 to 30% increase in the value of homes. It isn't instant, it takes time. So when rates came up, it took time for prices to fall. Typically it takes 6 months to a year, comps lag, takes time. So probably 2026, we'll see a 25% increase in the value of homes from where they were at their peak in 2022. That's my forecast of where we're going to see things kind of coming back to that peak and then surpassing it. Just because, again, like, although it's not in real terms, so I'll make that clarification. It is not in real terms, meaning not inflation adjusted. Inflation 2020 to now is up 20%. So the value of your dollar is like 1/5 of what it was like 3-4 years ago. Just crazy to think that like our dollar has lost like 1/5 value. If you had just sitting in cash and didn't do anything with it, you've lost 1/5 of your money in buying power. So that's obviously important, right? Boom, 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 boom. Apology for that clarification. I was referring to the 1031 products geared for those transitioning from active to passive real estate investing or needing to park their real estate funds without incurring tax. Again, I don't have an expertise on that. I can't speak to the tax ramifications of that. I don't know of anyone who's able to avoid tax entirely, but the 1031 exchange does help with that. I think no matter what you do in terms of rental income, you're going to pay some tax on that, but I'm not an expert on that. So I can't comment on it. Rocky says, hey Mike, what do you recommend for a group of students that don't clean their unit causing cockroaches? I've hired Orkin Pest Control, but I know that won't solve the root of the problem. Thanks. Rocky, It's bad. Like there are a lot of immigrants who come here and don't have the same cleanliness standards back in their foreign country of the culture that we have here. As an example, like using toilet paper isn't a thing. They use like a bidet to clean, as an example. In terms of like their cultural food changes, cockroaches come primarily into the house, not from the outside. We don't have cockroaches really outside here in Ontario. It comes through like the rice bags. So certain types of food have roach eggs and roaches in them. And so, and that's not to say that the white people don't eat that, go to the foreign markets and get the same kind of rice and eat it anyway. It's a side of culture. It's beside the race. It's not a race thing. It's a culture thing. It's how you live your life. It's not the color of your skin. It just so happens certain cultures have certain behaviors that are worse for certain things like bugs. And in some cultures, it's normal. I had a group of students that say cockroaches are part of life. Flies, they didn't see that as an issue. And that's a cultural thing. Here, we don't like that. We don't like having flies and cockroaches and stuff. It bothers us. In some countries in the world, it's a non-issue. They're just used to living with it and they've gotten used to it. So students, especially without mom and dad there, like what I would say is call mom and dad and make mom and dad or family member come down and clean and say, hey, your son or daughter is living like a pig, which happens a lot with students. Like I can't tell you how many times I have students go through exams, get busy, and they just leave the dishes for like 7 days, 8 days, like food's molding in the countertop, molding in the sink. That stuff happens. It's on them to clean. Although as a landlord, you're more of a counselor and a babysitter these days, the way that that's unfortunately the way the cookie crumbles. But I would say that you could charge them. If you can get Orkin to write you a letter saying that the bugs are caused by the dirt, and it's true. Like if you keep the environment unclean, the rodents won't leave, the bugs won't leave. You have to treat the root cause of the problem. You can't just spray chemical and be like, oh, they're not going to breed in our mess. No, every crumb has to be vacuumed off the floor. If there's any crumbs in the corners, under the table, on the counter, any dishes at night, it will create a problem, right? I know this because I spent a lot of time dealing with bed bugs and cockroaches here in London. I had a lot of immigrant students that, and I'm not going to say, I'm not trying to be racist or anything, but like when I put a nice group of girls from Toronto in, and it doesn't matter their culture, but like if they've been in Canada at least a generation, I never had issues. If they're from a well-to-do family with good grades, no issues. But I put an immigrant family, like an immigrant group of students in, and like I would say in 100 students I had, 90% of if they just landed off the boat, like FOB, fresh off the boat, I would say 90% of them, I had issues with bugs. That data, do with what you want. I conferred with a dozen of my other colleagues in the industry and peers, and it was a similar result. So a few thousand students in our little data survey. That's not to say, not to be racist, I don't want to be racist. Cultural differences moving from one country to another. You just don't know how. As an example, one of the students explained to me, clear as day, they would spill water all over the floor, and our floors are wood. So our floors would swell up, right? And it would run down to the basement below. They have concrete floors and maids. So they're like, I actually don't understand, like, why haven't you sent a maid? And I'm like, what do you mean? Like, well, we don't clean up after ourselves. That's for this, like the slave class. And like, they literally believed that. And that was a cultural mindset. And so it's like, well, explain to them like, hey, as a tenant here, we don't supply a maid to come every day and clean after you. Your rent doesn't include that. Let me explain to you that you have to clean up after yourself. And if you spill water and you wipe it up tomorrow and you leave a puddle of water over the whole bathroom floor because you didn't close the shower curtain, or you're washing your face and you throw water on the walls and you leave it there, that's damage. I'm going to bill you for that because you've destroyed the floors and destroyed the walls. And if the water then ran to the unit below and you caused harm to other people, there are forms you can serve for that. So there's a lot of like, and you get that with white trash tenants too. Like it cuts across any race. Just there are shitty tenants and there are good tenants. And there are things you have to educate your tenants on to avoid those kinds of things. But yes, it is 100% a tenant problem. You have to work with the tenant to get rid of the pests. Maybe the pests came from a migrating unit next to them and it's not their fault, but they got into this dirty unit like you're explaining that don't clean. You're saying they don't clean their unit. So that's why I'm assuming they don't clean their units. It's a fact that you've given me. Not cleaning the unit will cause, they love moisture. Like cockroaches love moisture. Bugs love moisture and they love dirt. So if you give them food, like little food scraps all over and you don't clean, they're going to breed and it's going to fester. So that is, no matter how much chemical you spray, the landlord-tenant board would have you believe that, it's the landlord's duty, and it is the landlord's duty, but it's in cooperation with the tenant. You can't solve the problem if the tenant isn't cooperative. I bought a building once that had a hoarder tenant in it. They had garbage to the roof, and I inherited this tenant, and it was my job to solve the problem. Ultimately, the only way to solve the problem of the rodents was getting in was one, they were leaving their door open to let a breeze come in. It's like, well, rodents are going to run into your garbage and live in it. We can't solve it if you're causing the root of the problem. You are the problem. But explain that to LTB, landlord tenant board, is difficult. We ended up just paying the person to leave. We're like, the only way to solve this problem was to move all of their garbage out of the unit. That was the only way to solve the issue. You'd spray as much chemical as you want on their garbage, but the way that they lived was the problem. So I'm sorry to hear that. It's a bummer. I would say keep treating it, work with them, explain to them that have the pest control company go there and educate them on how to solve the problem. What are the root causes of the problem? And they have to work on it too, right? That's all you can do, is you have to educate, cooperate, work together, find a common ground, and then don't place tenants like that again in your property. Learn from those mistakes and avoid those cues in the future. No problem. Happy to help. Would you lock in at a fixed rate? No. It depends. Like if your risk, it depends on your risk aversion, whether or not you should lock in on a fixed rate. Variable rates are falling, and I think we'll see variables in the 4 again, but for the next year or two, fixed rates are going to win out. You could do a 3 to 5 year fixed rate right now in the 4s, and variables still very much in the 5s. So you will pay 20, 30% more interest for the next 2 years. Over the next 5 years or 10 years, I think variable will win. So it depends on your time horizon. If you're only going to own the property for 2 more years, fixing it actually probably wins. So it depends is the answer. There is no right answer, but in the short term, I think that the fixed rate stuff will win. Over the long term, you'll lose. So do you value the cash flow now, or do you value it later? In terms of like over a 5 or 10 year period, the variable will win. Very, very likely. I think it'll take a little longer than Q1 2026. Hard to say. It's very, very hard to say whether or not, that'll play out or not. Someone just said, nice VIX short. You were so right. So the VIX, when I went live, I think it was on Wednesday, the VIX was still at 40 or something. It spiked to 67 in one day and back down to 16. It was the best trade in the last 2 years. Unfortunately, my account's mostly depleted back into real estate, and so I didn't make a whole lot of money on that trade. It's a shame, because it was a genius idea to short 67 VIX. We hit a 67 score on the VIX. That happened during the 2008 collapse for a day. It happened during COVID for a day. And when it happened last Monday, we thought the world was going to end with the Japan US carry trade, and it turned out to be a nothing burger, and the world continues on. So remember, whenever the VIX gets over 67, you go long. Grinder says, hey Mike, what's your thoughts on putting less than 20% down on a property? It depends. For the most part, I don't like doing less than 20% down because the fees are so high on residential. They'll charge you 4% of the loan amount, which is substantial amount of fees CMHC bakes in at the start. And no matter what you do, whether you refinance in the future, those fees are permanent. So if you refinance in a year after renovating it, you paid all those fees for nothing because you're back to 80% loan to value on your refinances. So suffice to say, I would say sometimes the commercial buildings, it makes sense. With residential stuff under 4 units, CMHC I don't think is great. If you can borrow the money at 15% prom note or from family, it's cheaper in most cases. You should just do that instead. Next question was, is there a lot more risk in investing in multifamily in towns with less than 50,000 people? For sure. I mean, there's definitely more risk associated with investing in smaller towns. Yeah, that's just a fact. That said, I prefer myself to be a big fish in a small pond. I like to dominate an area, and I find that in the larger towns, the cap rates don't make any sense. And so you have to take a little risk to make a return. So for me, I like the smaller towns because of that advantage, I guess, so to speak. Chunk says, when should I sell Tesla? In the long term, Tesla will be fine. In 10 years, you'll make money. But will your return be better than the S&P 500 holding Tesla? I don't know. I think holding individual stocks is dangerous. So my overall recommendation is if you get an upswing, take your profit and go and get into the indexes and hold the indexes. There's rare occasions where I think like individual stocks can make sense for a small percentage of your portfolio. I would say, holding individual stocks is very risky. And you could see large swings, as we saw, you can see large swings of 10, 20, 30, 40% on a single stock. So if that's a large percentage of your portfolio, you can see violent swings in your net worth. If you're able to sleep at night and that doesn't bother you, then keep holding, I guess. I would say for me, it comes down to, I think Tesla's trading at an unreasonable PE ratio. I think that Nvidia is trading at an unreasonable PE ratio. That doesn't mean that I short them. Even though I think they will go down over the next year or two, there'll be opportunities to buy in at much cheaper prices than right now. I think Tesla and Nvidia will have sell-off periods where you can get in at 20, 30% cheaper than we're at right now. That doesn't mean that you should totally take profit. I think a smart thing to do, John, might be to hedge your position. Like if you have your Tesla longs and you like it, you could buy some puts, you could sell some calls on it to protect. Selling calls will be collecting some theta, and if things do go down, you make some money on those calls. Buying puts, you're obviously buying theta, it's not as good. Over time, you'll lose to decay, but it'd be a position where, obviously you'd be protected if things majorly turn down. So I would say buy some insurance. If you're gonna hold those longs, buy some insurance on them. So if Tesla does drop, you're fine. So buy puts, sell calls on the Tesla position that you have while continuing to hold those equities, or just take some off the table. If you're in a profit position, take a little bit off the table. Next question was from, no problem, Tristan, happy to help. Randy says, you just mentioned cap rate for res. What's a fair cap rate for small towns? Again, it really depends, but if I'm buying in a small town, I want to be at like a 10, 12 cap rate for the most part. Tristan says, are you still interested in building an off-grid home like solar, well, and everything? I am. I would like to add solar to my property. I'm already on well here. I'm already on septic here. So I would love to add solar to my current property and be entirely off-grid. But I don't know. We'll see whether or not the numbers make sense. On solar right now, I'm waiting for some government programs. There's some cool programs coming out where the government's going to help subsidize solar in Ontario. And those would be interesting because then the government's paying you to do it. Then all of a sudden it makes sense to add that off-grid capability to your property. But again, all my capital right now is just being deployed into real estate because I think there's better opportunities in real estate right now. So yeah, I got through the whole thing. So if anyone knows anyone in solar who's like an expert in London, send them my way. I'd love to get a quote done for the most efficient way to put solar in. What else can I share with you guys today? I think that's pretty much it. I got through all the questions. We've had a nice little stream tonight. Remember, the secret to unlocking wealthier you is 3 levers and control your financial future. Spend less, earn more, and maximize returns in the difference. Those are the 3 levers. That's it. You gotta find ways you're gonna spend less money. You gotta find ways to earn more money, pick up a side hustle, pick up a part-time job, just grind and get it done. And then of course, maximizing returns. And as your portfolio grows and as you build more wealth, the last lever, number 3, how you invest your capital, becomes the most important thing you can do. Frugality is not even that important for me anymore. Like whether I spend, even if I spent half as much money as I'm spending now, that has less of an impact on my net worth than if I had a 1% change in my return for the year on my portfolio. A 1% difference on my portfolio yield has more impact than my entire budget of what I spend. So then spending becomes not as important. So in the early days, how you spend is super important. In the later days, it's all just about what you can earn through your portfolio. So as you continue on the journey, in different stages of the journey, different advice applies. But anyway, thank you everyone for tuning in tonight. I appreciate everyone who's watching the replay. If you're watching this, hit the thumbs up button. I appreciate it. It's like clapping for a presentation when you're done. Everyone claps in a room. This is your time to clap with the little thumbs up button. Tell the YouTube algorithm you got some value here. Share this somewhere on social media with a friend. I would love it. I would love to be tagged in posts. If you watch this tonight and you got some value and I answer one of your questions tonight, go on your Instagram stories, tag at Mike Rosehart. I would love to reshare my story that people are getting value. It'll draw other people to my stories. It'll draw other people to the channel and we'll get some value here. That would be helpful for me. That's my ask for tonight. If you got some value, it costs you nothing. All you gotta do is just make a little post and give a little thumbs up and join me in the comments. All right, everyone. And if you know someone who wants to join the team and wants to work with us, please reach out. We're looking for people. I'm looking for live-in property managers. I'm looking for contractors to join the team. I'm looking for people who want to help grow on our way to 100 million in properties. So if that's you, reach out to rosehartcapital@gmail.com. All right, everyone. We'll see you next week.